The other thing is sort of shifting gears to natural gas. Natural gas is, and I said last week, beginning to make me nervous. It's been a little bit punkier. Storage levels for natural gas in the U.S. are just slightly below where they were a year ago. And you've got this overhang of this super El Nino, supposedly, that could cool things off. And so, the natural gas names have sort of been punkier. We do have Range Resources and EQT reporting earnings this week. They'll release results after the market close on Tuesday. I do expect a slight beat by EQT and a beat, probably a little bit more than a slight beat by Range Resources, but I think people have gotten accustomed to EQT beating, and while the consensus estimates are for earnings to be at around 41 to 43 cents per share. I'm at 44 cents per share. So I think a slight beat, not as big a beat as they had last quarter, but I think a slight beat. You'll have good things to say on the call. And the thing is, we're just battling this natural gas price that on the near month contract is now back below $3 per MMBtu, which is not good, not comforting. And if I look out here, I'm just looking at where we are out in November, December, we're 370. We don't even have a four handle until we get to January, February, not even in February, just in January, I have a four handle. So, there are concerns around natural gas here, but I still like EQT, EXE. I'm sticking with those names, even though I'm a little bit nervous here, given where natural gas prices are. I expect a good solid quarter out of EQT and also Range, although we don't own Range, but certainly out of EQT, I'm expecting a solid quarter.
Hey, Bob, on the natural gas front, as you pointed out, it's been flat on its back and shows no signs of revival. But recently I've heard people talk about Cheniere LNG, mostly because it's more diversified and has an export capability. Is there some demand story from overseas that's going to help LNG more than EQT?
Yeah, that's right. There is. And I think you and I talked about this a couple of months ago, Charlie, and with what capacity had been knocked out in Qatar from the Iranians shooting missiles at it, ultimately that's going to take a long time to repair and get back online. So ultimately you have LNG and some of these other companies filling the gap, but there's clearly a demand story for Cheniere, and part of the reason that stock has done very well, I haven't looked at where it is recently, there is a demand story because they're an LNG exporter. They're adding LNG export capacity in the U.S., and for that reason, that name is one I'm trying to find here. I'll have to look it up.
It's been creeping higher for the last 2 weeks.
Yeah, I don't think there's been any new news. Yeah, it's one of the names you want to play. It's off from its peak. Where do we peaked at, was it back in April after as part of the whole outbreak, and I think that was around when part of the capacity in Qatar was taken offline. But there's definitely a thesis here on the long-term demand for LNG globally, as long as the global economy remains strong. Yes, there's this sort of uncertainty, at least for the time being, in the Middle East around Iran. This is a name that's going to benefit long-term. And again, the long-term thesis on natural gas, whether it's here in the U.S. or internationally, is on the demand from these AI data centers, industrial demand growth, and power generation. So
just to make sure I understand, what differentiates LNG from EQT or EXE? Is it the export capabilities?
Yeah, it's EQT and EXE producers. They drill wells, they produce the natural gas. Cheniere doesn't drill wells and produce gas. They just take the gas, they contract for it, and then they export it through or they contract capacity in their export facilities. So their revenue is strictly tied to that LNG export capacity and volume and that demand. So they're just taking the volume that others produce.
Bob, let me ask you a question. Why is Comstock such a dog lately? That thing had a nice run at the end of last year. It's been a dog this year.
It's the natural gas. It ran up on the natural gas euphoria, and natural gas prices moving up into the winter. It's very highly leveraged to natural gas. It's one of the higher beta names on natural gas. And with the pullback in natural gas below $3, that's a name that's going to give a lot more back. I've never been a big fan of it just because of the leverage, and it doesn't pay big dividends. I've stuck more to the steady names like EQT and Expand Energy and Range.
You don't like to gamble like Jerry Jones? You're not a Jerry Jones guy?
There's a lot of volatility. A lot of volatility on that name, and you can trade it around. If you can pick the bottom and sell it at the top, there's a lot to be made there. But I take a longer term view with the names. I know I have good solid fundamentals and with the dividend solid balance sheet.